Joining us for thoughts on energy and other sectors on her radar, Diana Avigdor. She's Vice President and a Portfolio Manager and Head of Trading at Barometer Capital Management. She's in Toronto. Oil has been kind of messy. It's been the worst equity sector in Canada and in the U.S. The big question is what happens between now and tomorrow. What are your thoughts?
I think that there is lots of conversations going on, and no matter who you're polling, you're going to have different views. There's a lot of pre-positioning into this. Oil is not acting well into this. Yesterday's headlines were not oil friendly, and it does not look like there's going to be a cut, and if there is, it's going to be less than expected. Some people were hoping that it's going to be a lot more given the oversupply and where the level of oil is. OPEC is in a tough situation. Do they cut production in order to keep price up and keep U.S. competition in place, or do they let the prices be where they may and let the U.S. production supply sort itself out? This morning we had some comments from the Saudis saying that U.S. is a supplier now to the market, maybe they should cut. So there is some political going back and forth. I think that positioning-wise, Francis, from a trading perspective, you can see that the street is positioning themselves short into this. And so sometimes what happens is there is a bit of short covering no matter what the news are. So I think that if there is no production cut, which may very well not be, if only to see how the market takes it, you might see some short covering into that. But that is the short-term trade. The longer-term trend still doesn't have too many tailwinds for oil here.
And where I'm just looking at the energy sector in Toronto on the TSX Composite, it's up 1% on the year, sharply underperforming the market, which is up almost 11. You are not willing to step up into any of these names right at the moment?
No. Our strategy, and always has been, is good, getting better, and price action needs to confirm the fundamental story. We're not trying to see where it bottoms. We'd rather lose some from the bottom and have a confirmation before we enter. In the beginning of the year, these stocks have started to act poorly. We have very tight stop losses, and it slowly took us out of the energy names, with the exception of we still have some of the pipeline and infrastructure. These are the transportation type of mobility type of stocks into a sector that has a lot more supply and needs this infrastructure. So those are still acting okay, more or less. We will see what the future holds. We don't hesitate to take ourselves out of positions if they're not acting well. But we prefer being in what's working, and what has worked, as you have mentioned, are other sectors. Consumer discretionary. We had some consumption number yesterday out of the U.S. better than expected. The data is coming in better and better. It is seasonally attractive. You look at the retailers and consumer discretionary we have discussed for a while. Technology. Those are the sectors that are holding us and tend to be attractive at the moment.
I guess one of the things, though, and I know you guys stick with what's working and slowly get out and make sure you're not in those things that are not working, good strategy, but sometimes you reach a point of inflection where one has gone way too far and the other way too far. Do you not, just in terms of the discretionary, the retail stocks, I mean, they've been pretty strong. I'm just looking at the XRT after a bit of bumbling around all year, excuse me. Are kind of stretched too far on either side, the good too good and the bad too bad?
You know, Francis, I hear you, and all I'm going to say is that we don't know at what point excellent continues to be excellent and bad continues to be bad. It's not about picking the top and picking the bottom. What happens is that you end up losing some at the bottom, or not quite picking the bottom, or not quite catching the top, and that's okay. You know, if suddenly something happens and the consumer is not coming through, you will start seeing that in the stocks. They're going to start turning down, and at some point, if you're a disciplined watcher, and if you realize that something is not working relative to the fact that it should be, then you've missed some at the top but that's okay. You still have your profits and you move and rotate. It forces you to rotate into what's working at a decent time without picking the bottom or the top. You know as well as I do, you look at BlackBerry, for example. At what point did we say it's bottomed, right? Any given level, when it stops, you say, oh, is it overdone? Is it the bottom? But until it starts turning around and until there is some positive narratives, and even though the metrics change, for BlackBerry, for example, we're no longer talking about major market share. We're talking about stopping the bleeding of the cash flow. So the narratives and the metrics change as the story reappears. But you missed the $6 stock on BlackBerry, but the $12 now becomes more attractive, but there is a different story. So it's not about picking the bottoms and the tops.
Diana, somebody told me a long time ago, if you can grab that big chunk in the middle, you're doing just fine without picking, as you say, bottoms or tops. We're in the seasonally the best time of the year for equities, and even going into the first few months of next year. What is your view? A few months or a month ago, you said you're moving into the U.S. equity market a little more. Is that still the place you want to be?
Yeah, we have not changed weightings and sector exposures for quite a while now. The sell-off last month in the market was not enough to trigger us out of any of the existing exposures. We are still more heavily weighted in the U.S. than we've been. The U.S. dollar is helping here as you value your assets in Canadian dollars, so that is a further push. At the very least, not a drag like it was years past. So we are exposed in the U.S. It's diversified in the sectors that we like, such as technology and consumer discretionary, and defense as well. So yes, we have not changed exposures in quite a while.
Diana, have a nice slow day today.
Thank you very much. Same to you.
Diana Avigdor, Vice President and Portfolio Manager and Head of Trading at Barometer Capital Management. She was at the TSX.